One of the most common questions we get asked is, Glenn, if I've made $100,000 in profit, then why isn't that sitting in my bank account? And to explain this, we need to explain the difference between profit in the profit and loss and the actual effects of your cash in the balance sheet. So when we look at things where your cash may have been spent on, there are things like plant and equipment purchases that won't affect your profit and loss, that will affect your cash. You might have some debt on those plant and equipment purchases and on equipment purchases from prior years. So your debt repayments are paying off balance sheet items, not paying off an expense to your profit and loss. So the profit is being used to pay down debt on previous purchases. You might have also bought a business premises and used debt to fund that. So paying down the debt on the business premises would also not affect your P&L. So your profit is being used to put into assets. Other factors might include your working capital. So cash is just one component of your working capital. So when we talk about working capital, we mean your stock, your accounts receivable, your accounts payable, and your cash. So all the movements of those four items will affect your profit or your loss for the year. So profit is very, very rarely equal to what is the movement in the cash in the bank.